Good morning. There's the opening bell. Welcome to all of you. That means it's time for Trading Futures here on a Tuesday morning. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined by my good friend, Michael Fairborn, great friend and great educator as well. And Michael's going to be out there in the chat helping out to answer your questions along the way. Keep that conversation going. By the way, if you're joining us in the recorded version, we're just as happy to have you here too. Thank you for joining us. You can leave a comment in the comment section of this webcast and be a part of the conversation as well. But for those of you that are here with us live, thank you again for joining us. We appreciate seeing all of you. The usual suspects, Mary and Will and Janelle and Kevin and everybody else, we appreciate you being here. If I don't get to everybody's name, we could do that all day long, and it would be a little bit like Romper Room, if you remember that. But we're going to jump in here really quickly. We're going to take a look at what's going on. We're in the eve of an impending government shutdown. Last day of September into October. And that, I think, has some potential to not necessarily move the market, but at least make the market a little bit more skittish. So we'll take a look at that as we get into this discussion, and we'll take a look at what might be moving and what might not be moving and kind of cast our eye around. Now, I will warn you right off the top, I've been having some challenges with my Thinkorswim desktop software platform this morning with the paper money version. So we might have to work through those issues, but that's always a good way to talk about some things. Now, as we get into some of the housekeeping items, remember that when we talk about individual symbols, when we talk about individual strategies, those are for illustrative and educational purposes only. Those are not recommendations. Those are not endorsements of a particular strategy or of a particular idea. They are simply presentations of illustrative examples. Remember that futures and futures options trading involves substantial risk. It is not suitable for all investors. Make sure that you're aware of the risks and characteristics of futures and options trading prior to trading any futures products, or even prior to considering trading any futures products. Remember, the futures accounts are not protected by the SIPC. Also, futures trading requires separate trading authorization. Not all traders will qualify, nor is it suitable for all investors. Also, as we get into this discussion, we'll talk a little bit about some of the risks involved in trading futures. Remember that virtual currency derivatives, one of the things that we're going to talk about this morning, involves unique and significant risks. If you're going to consider strategies on futures contracts on things like Ethereum and Bitcoin, make sure that you read the NFA investor advisory and the CFTC customer advisory on those products. Remember that those products are digital representations of value. They function as a medium of exchange, but they do not have legal tender status, at least not yet. But things are changing, and we know that things are changing quickly in the regulatory environment when it comes to virtual currencies and distributed finance. So it's always a good idea to keep abreast of whatever the new developments are, make sure that you understand what some of those things are. Now, also remember that we're going to be using, as I said before, the Thinkorswim desktop software platform, specifically the paper money version of that platform. It is provided for educational purposes only. It is not a guarantee future success out there in the real world. However, it doesn't do certain things that a live trading account will do. It does not facilitate the use of studies in searches and scans. So that's one of the things. Just be aware of that fact as you move your practice from paper trading to live trading. There are some changes, and we're going to use technical analysis in this discussion today. Remember that technical analysis is not the only way to look at the market. There are several other ways, fundamentals and otherwise. Those are all theoretical in nature. None of those are guarantees as to what's going to happen in the future, since we're talking about futures. So let's jump over here to what's going on, and we'll take a look at what's going on in the S&P, or excuse me, at least right off the bat, /MET, the micro Ether futures. So I'm going to jump over to the Thinkorswim desktop software platform. As I do that, it's a good opportunity for me to remind you to click on subscribe down there at the bottom of the page. If you've not done so already, click on subscribe, give us a follow. It's going to bring that content to you and others, and it's at no cost to you, and it's a great way to keep involved in the community of traders at the very least. So the trade that I was setting up, and again, I was having some challenges with this this morning with my paper money account, filling the order. So if the orders don't fill, we'll at least get to that point of placing the order and recognizing that that's what we would do. We won't be able to follow along with those trades. And I had that challenge with this particular trade this morning, thinking about this being the micro Ethereum contract. Ethereum, one of the other alternative coins to Bitcoin. We're going to have a lot of content coming out soon about the nature of these products, these cryptocurrency products, Bitcoin, Ethereum, stable coins, and others. So keep your eyes on the education space, keep your eyes on the webcast space as well for more content. It's going to be forthcoming, I think, pretty soon, just because of those regulatory changes. But micro Ethereum, and again, this has always been my contention that if you use the left thumb test, now I'm just going to say this with caution because you have to understand the narrative and the risks and the associated driving forces. But at the same time, if you're going to look at technical analysis as a measurement of how you put a trade together and how you enter and exit a trade and determining your if this, then that type of statement, then taking some of that narrative out of the equation is not such a bad idea. So I talk about the idea of using the left thumb test. And many of you have heard me talk about this. I know Michael Fairborn has, for sure. And I know Janelle has, because I talked about it in a couple of events that she was at. But it's this. You take your left hand, you stick your left thumb out, you put it up there at the top of your computer screen, and you wrap it over the top, and you cover up with your left thumb the name of the instrument that you're trading. Now, no, you could use your right thumb too if you wanted to, Carol. Absolutely, you could use your right thumb. I just call it the left thumb because I'm right-handed and my left thumb is the one that's closest to the name on the chart. So all I'm doing is I'm covering up the name of the instrument on the chart. And then the question is, if I don't know what the name of the instrument is on the chart, if I don't know what the futures contract is that's on the chart, from a purely technical analysis perspective, does the trade make sense? And that helps to take some of that kind of confusing or sometimes pejorative bias. Yes, you stick your left thumb in, you stick your left thumb out, and then you shake it all about, Kevin. Absolutely. Thank you very much. I was going there in my head. You took it right to the chat, so that's good. But the idea is you take the narrative out of the discussion and you simply look at it from a technical analysis perspective and you ask yourself the question, would I still take this trade? Or am I caught up in the narrative and is that influencing my perception of the trade? So my thought was this in terms of looking at Ether the micro Ethereum contract this morning. And again, this is the smaller of the two contracts. There's ETH /ETH and there's /MET, which is the micro contract. So as we take a look at this, the idea being that we've seen this rally up and kind of this pullback here, and it's been going back up and retesting a couple of times this resistance right around the 4,300 mark. Now, the 4303, 43 to maybe 4296 or so, it's in a range as levels of support and resistance often are. So that's this corresponding line right here at 4306. So my thought was in looking at the right-hand side, which is the 5-day, 5-minute, these are 5-minute candles, is taking advantage of this potential upward movement as it's coming up off of this 4164 support level, which is the bottom of this candle right here on the bigger chart. So it's bounced up in the 5-day chart, and we saw a pretty good increase in momentum. So I was watching this, and I actually set the trade up for a bounce, and I was looking for the bounce up off of this 4179 mark and going with the idea of a close above the high of the low candle or a breakout. I was looking at entering on a breakout of this resistance level here, which was previous support, but it was kind of the resistance. If we zoom in on this, it was kind of the midpoint resistance. Let me zoom back just a little bit, and let me make this auto so that we can come back down and see that range. So I'm zooming in on here. So I was looking for kind of the breakout of this double bottom pattern right here and looking to use that as an entry. So if price breaks the double bottom, then enter the trade, else wait. And it did. And my order didn't fill, and that was a paper money functionality issue. So the trade in this particular case, this hypothetical illustrative example, would have filled at this particular point, theoretically. And then, live trading account, I don't know. But that would be the point of our discussion, right? So momentum's starting to pick up. We got this break above that resistance level. This was a buy stop at 41.91. We got in on that buy stop. And the intent of the trade is to take advantage of this upward movement all the way up here to 4,300. The way that I created the OCO bracket, I'll just show you how I did it. Right click, buy custom with OCO bracket. I created a buy stop at that 41.91. So I made that a buy stop. Now remember, stop orders, when we talk about futures contracts, stop orders, whether they are buy stops, whether they are sell stops, doesn't matter. If they generate a market order, so it's a buy stop market or a sell stop market, and it generates a market order, that's going to be worked by the exchange, not as a market order, because a market order says fill at the next available price. And in a fast moving futures market, that next available price could be significantly higher, could be significantly lower. So the exchange, the futures exchange, designates a protection range or a set of protection points, a particular price band, much like we would designate that range if we were setting this up as a stop limit order, a buy stop limit or a sell stop limit. And if the price goes outside of that range before filling, then the order doesn't fill, it gets rejected. So there is the potential that we wouldn't get filled. That's why I said, when I said we could have gotten filled, but it's theoretical and there's not a guarantee of that. So when we put this out as a buy stop market or a sell stop market, it doesn't matter. That's going to get worked as an exchange designated limit order. And that's for their protection as well as ours, in terms of where those orders get filled. So here's the price. So we set it at 41.91 as our buy stop limit, or a buy stop. And it said, wait, stop, don't do anything until price gets to 41.91 or above, then buy the contract. One contract of the /MET October expiration. So now, then I created an OCO bracket order. And the OCO bracket that I put on the top side was at that 4,300. And I made that a good till canceled. Till I took the trade off till it filled or till it expired, which at Schwab is generally, but not always, 6 months in terms of that good till canceled order being out there. And the idea being that we would fill this move to the upside on this breakout. Now, that would take it right back up to that resistance level. There's that resistance level. Not a big move, just a quick, theoretically quick swing move. And then I put a stop order back down here. Let me just zoom back out off of that level of support where it bounced earlier in the evening, in the overnight time frame. It bounced up off of that 41.61. So I put a stop at 41.61, and I made that a sell stop 41.61. So assuming that we were long the contract at that point, sell stop, and that was a sell stop market. So that would get worked as a market, as an exchange designated limit order. And I made that time enforced good till canceled as well, so that those two match. And the idea behind putting those as good till canceled and the initial order to enter as a day order is, if that order doesn't fill within the time frame that I expect it to fill, which is in the next, or was in the next few minutes, then I want to do something different. I want to come back and I want to reevaluate that. But once I'm in the trade, I don't want to have to recreate these stop orders or exit orders, take profit orders every single day. I want those to be there. Now, the likelihood would be, theoretically, that this trade would fill and then get taken out either on the profit target or on the stop, probably relatively quickly. But there's no guarantee of that for sure. So that's how I created this particular order and putting this together. Now, Martin asks a great question. If there's a different methodology for swing trading on kind of an intermediate time frame perspective for swing trading futures, and to be honest, there's the methodology is going to be very, very similar. So, Martin, I'm glad you asked that question. It's not like I paid you to ask that question, but Mike Fairborn owes you $5. I'm kidding. He doesn't owe you $5. I'm sure he would give it to you if he had, if you were there in person, but that's neither here nor there. So we put this order together. I fired this order off and it got rejected for buying power, even though there's buying power in my account. So it's a paper money issue, not a trade issue. So I clicked on confirm and send. I read through the order, made sure that it was to open, made sure that these were closing orders, made sure that we had accounted for transaction costs in this trade. And I was putting it in my futures group and I clicked on send and see, I'm getting kicked out and rejected because buying power would be below zero. So that is the concern. And that's why it's creating that issue. Now, Martin, let's talk through this because this actually kind of sets up that whole perspective again in terms of the intermediate term swing trade, not just this short-term swing trade. Now, you notice that the short-term swing trade is working here, at least in my favor. So assuming that we got in on that breakout, even though it pulled back a little bit, started to go against us, now it's starting to move in that direction that we want it to go in this particular example towards this resistance. Will it get there? I don't know. Will it go down to the stop? I don't know. That's why we have those two orders in place in the event that it goes one direction or the other, which theoretically it could do those. Kay says, does that mean we're poor? Not in this account, no. It's an account issue. So recognize that can sometimes happen with paper money. And just want to be 100% clear and transparent about that. That is a paper money issue. So I'm going to work that on the back end. So we're going to deal with that. We're going to talk about it. Now, if you didn't have that buying power in your live trading account, then that would be a different story. And then you wouldn't be able to initiate that trade until cash was added to the account or positions were liquidated. And that's where you run into circumstances where if maintenance margin increases, for instance, or initial margin on a trade increases, there you could run into that margin call. You can get a call from the margin desk and say, what do you want to do? Liquidate positions, or you want to add cash to the account? So that's one of the risks of trading futures. I just want to be 100% transparent about that. So let's do this. I'm going to pop over here really quick. We're going to maximize this sell. And I want to talk through the circumstances of this, and we'll talk about the mathematics a little bit as well in this particular case. So here is the characteristic label. And that label, by the way, is available in the description page of this webcast. But in this micro Ethereum futures contract, our tick size is 0.5. That's this number right here, just to the right of the decimal. And that's going to tick by or increment by 0.5 values. You see it went from 0 to 5. And the next tick is going to take it to 0 or 5 again, right? So it's going to tick in those 0.5 values or sizes. The tick value is 0.05. So every time that ticks, that's a nickel. So a point change. So if this goes from 41.96 to 41.97, that is 10 cents. Our notional value in this micro contract, and the reason, that may very well be a reason. Exactly. You're right. I might in this particular case, Silas. I'm going to check that afterwards. You're right. And that's holding that margin. So the notional value in this contract, $419.75, which is this point value times this current price of the contract, gives us our notional value, or essentially, some people describe it, and I've talked a little bit about this. I talked about this last time. Some people describe this as the leverage of a futures contract gives us control of that notional value. And that's kind of a misnomer because we don't have control of anything. We're not controlling that amount of capital. It just simply represents the amount of notional value that each contract carries with it, right, is representative of. Doesn't mean we control it or anything else, because we have no control. We're at the mercy of what the market does in our risk management. So just be aware of that. Now we can plug this information into the discussion here and kind of walk through the math really quickly. So what we're going to do is we're going to convert this move that we were looking at. So what I'm going to do is I'm going to pop over to the right-hand side here again, and we're going to take a look at where our entry price was. So our entry was 41.91, and our target to the upside was 4,300. So 4,300 minus 41.91 is 109 points. Okay, so 109 points. So we take 109 points. Now we've got to go back over here to the left-hand side. So 109 points times 0.10. So 109 times 0.10, $10.90. Small contract, right? So we're looking at a small potential gain here. Now, the other side of that equation in this particular case is if we were to come back and we were to say, let's go to the right-hand side and let's say what's our stop and what's our entry. So our entry was 41.91 minus our exit 41.61. We said 41.61. So 30, and 30 times our point value, 30 times 0.10 is $29. Right? Whoops, did I do that right? 30 times whoops, that's what I did. Point. Let's just clear that whole thing. 30 times 0.10. There we go. $3. Okay, you can see the risk to reward there. And that's how we would go about calculating. Now, I know out there in the ether, to talk about ether, but out there in the Google sphere, if you will, that there are a lot of futures contract calculators out there. Those are all third party. Make sure that you understand that none of those are endorsed by, offered by, or recommended by Charles Schwab. But you could make your own spreadsheet and do the same thing, right? Just do the math in terms of calculating risk to reward on the trade. So risking 3 to make 10 in this case was what we were looking at. Risking 3 to make 10 in that trade. So positive reward to risk in this trade. Now, I wanted to address the question that Martin had asked, and that was, what's the kind of intermediate term trading perspective of something like this if we were looking at doing a swing trade? So I'm going to go over here to the left-hand side. So Jim asked the question, how do I get that pink bar displayed? This is a study. It's called Futures Labels, and that Futures Labels is in the description page for this webcast. I'm going to be really nice this morning because you guys are awesome, and I'm just going to go ahead and share it with you this morning out here. And remember that anything that we share is for illustrative and educational purpose only, number one. Number two, not guaranteed for time and or accuracy. So properly warned you be, says I, in this case, but I'll be nice and share that out there so you got it. And just apply that, you import it, and then you put it in as a study, and it shows up here. By the way, if you want to learn more about how to use those studies and use think scripting to create them, because that's how I created this particular label, I'm going to pop you over here to the Trader Talks webcast page. By the way, this is what you're subscribing to when you click on subscribe down there at the bottom of the page. So if you haven't done that, when you come over here, you'll see this subscribe, and it'll say subscribe. If you've already clicked on it, it'll say subscribed. So make sure you've clicked on it when it says subscribe, not when it says subscribed, or you'll unsubscribe yourself, which you don't want to do. But if you come over here and you type in ThinkScript, My good friend Michael Fairborn, who's out there in the chat, teaches a webcast on Thursdays on ThinkScript. I happened to fill in for him last Thursday, but boy, I'll tell you what, he gets pretty deep into some of these ThinkScripts as he builds those ThinkScripts. So good stuff if you want to learn how to build those scripts or how to use those scripts with futures and with equities and with other strategies. So let's talk about this. Carol or Carl says, what's the ticker symbol for gold futures? It is /GC or /MGC if you're looking at the micro. So now I want to address Martin's question. I know it was a roundabout way to get there. But the question was, well, can I swing trade this on an intermediate basis? And the answer is absolutely yes. So what we're going to do is I'm going to just draw a line here. Now I'm on the 1-year daily chart. And I'm looking at this from the perspective of this price kind of winding up in this little bit of an ascending triangle again. It's kind of come back down into that triangle. It's bounced its head off of this resistance, which was previous support. And we could probably almost argue that we've got something like this going on. We've got kind of this symmetrical triangle type of perspective, and we're kind of coalescing kind of right around the middle there. But if I were going to trade this from a swing trading perspective on an intermediate basis, one of the considerations might very well be as a technically driven trade would be looking for a definition of when to enter the trade and then when to exit the trade, just like we did on the shorter term time frame. That's one of the great things about technical analysis is that it is fungible across those different time frames. All right, so I could take the same perspective and I could move it to the short-term trade that I could move to the intermediate-term trade. So intermediate-term trade, in this case, being days to weeks, or maybe even weeks to months in this case. So what we might look for here in this perspective is saying, hey, here's this symmetrical triangle, and I'm going to draw the base of that symmetrical triangle here, kind of a medium range. I'm going to say, all right, that base of the symmetrical triangle is right there. Remember that technical patterns like this oftentimes tend to fulfill themselves to symmetrical distances. So what I'm going to do is I'm going to take that level right there and I'm going to duplicate that. I'm going to say, look, that's the base of the triangle. Once this breaks out of the triangle, where is it likely to go? It's likely to go the distance of the base of that triangle. That's just a technical characteristic. That's one of the things that, one of the reasons why we look at price patterns. But I'm going to detune that a little bit, and I'm going to bring it right back down to the midpoint. So I'm going to say the target on this intermediate term swing trade, which would just be a symmetrical move, would be up here right around the 55.85 mark. Okay, I just detuned that by bringing it down rather than from the diagonal trend line down to the midpoint line. And there's some reasoning behind that because I'm going to use that midpoint line as my entry into the trade, if this, then that. So I'm going to say, look, if price breaks 42.95 or we'll call it 43 even in this particular case, 43, then enter the trade, else wait. And once it enters, then look for this to make that move to the upside. Now, some traders, some swing traders, intermediate term swing traders might enter a smaller position here on this breakout and then add to that position when it breaks that diagonal trend line. We've got a lot of great webcasts that talk about swing trading. And then we've also got built into this pattern function, we've got an area that we could use as a stop on this trade. So if we were to put this trade together, just the way that I was talking about it is we could right click right here at 4,300. And I'm going to do another buy custom with OCO bracket. And I'm going to make this a buy stop, which says stop, wait, don't do anything until this price breaks 4,300. Now, it's not there yet. So this isn't going to fill right away, theoretically. But we're going to make that a buy stop order to get in once price breaks that 5,300. We're at 41.85 right now. So it's got a ways to go from where it's trading because it's trading at the bottom of that candle. So we might put this in here as a good till canceled on this intermediate term swing trade. So that's our entry into the trade. 4,300 getting broken. This is a buy stop. So it's waiting to enter the trade until it breaks that 4,300. And then our target to the upside in this case is 56. We'll call it 56. You know what? I'm going to call it 5,600 even. Traders like to round. By the way, if any of you have ever been stopped out of a trade because you placed a stop at a round number, one of the reasons why that happens is because market makers know that traders like to round their numbers off to round numbers. Now, I'm doing it simply for illustrative and educational purposes here, just because it's easier and faster. But if you're trading, a trader is trading positions and putting stops in, maybe be a little bit more cagey about it and put that order in at slightly different numbers so that it's not kind of right there in the herd with the big round numbers, if that makes sense. Because market makers know that that's a human tendency to do that. All right, so that's our target, 5,600. That's that symmetrical target of that symmetrical triangle. And then we're going to put our stop down here at a break of 38, we'll call it 38.60. So if this breaks 38.60, then we're going to exit the trade. 38.60 is going to be our exit, and we're going to make that good till cancel. So now if we were just going to label this, let me label where these points are. Let me grab my text note. So I'm going to drop this back down. So our stop is right here. Our entry is right here. And our target is up here. That's our intermediate term swing trade. And so, Martin, that's exactly how you would go about kind of putting together that intermediate term swing trade. And you see that the methodology, the approach, the characteristics of the trade, all extremely similar to what we did over here on the intermediate or on the short intraday side. We're just doing it with an intermediate time frame. Now these are daily candles that we're looking at. So the trade slows down potentially, but we also have those essential elements here. We have an entry point, we have a stop point, a point at which we would get out if it's going the wrong way, and a point that we would get out if it is going in the direction that we want it to go. And you could take that and translate it to really any of these strategies. And in fact, one of the reasons why we talk about this in terms of looking at both the intraday, this is the 5-day 5-minute, as well as that daily chart, is this intraday may give some insight into what's going on with that kind of intermediate time frame. So this is the mark to beat. Our entry into this trade, if I zoom back out here, we're going to likely see that label. If I were to look over the horizon a little bit, we're going to see that entry label right up here at about 4,300 for our intermediate term trend trade. So on the intraday basis, it sure doesn't look really strong, like a real strong possibility that in the next little bit that this is going to get up to that 4,300 and give us that entry. But if we were starting to see this really move to the upside, and that may give us a better indication that we might see an intermediate term entry into that intermediate term swing trade. So some traders will use this perspective. That's why we create sometimes these grid charts like this to see the left-hand side as the longer term and the right-hand side. That's just my preference. You don't have to do it that way. You can do whatever way you want it. You can stack them top and bottom. But using those two different time frames gives you kind of a dashboard to see what's going on with the trade. And it right now doesn't look like we're seeing a lot of upward momentum. So the likelihood of this trade kind of filling itself, at least in the very near term, probably pretty low. No guarantees of that, but probably pretty low. All right. So let's do this really quickly. I want to kind of, because I'm still experiencing those problems with the account. Let's do this. I want to pop back over here. I want to go to our futures grid and just kind of see what the futures are doing. One of the ways, by the way, that futures contracts, I know the title of this particular webcast is Trading Futures, but one of the ways that futures are used on a fairly regular basis is as a market indicator. Now, Michael Fairborn teaches a webcast, and I had the opportunity to fill in for him the other day, called Market and Sector Analysis. By the way, that webcast is moving to Friday afternoons in place of the Market Movers webcast, because we were teaching the same thing. But you can use futures contracts as kind of a measure of what's going on in the market. So rather than using the indexes like I do in my index trading grid or trading index options webcast on Wednesdays, we're using the futures contracts here. So this is /ES. This is the E-mini S&P 500 index futures. And we can see what's going on today. Again, ahead of that impending government shutdown, we're kind of seeing things pre-market. And well, the market's open now, but pre-market, we were kind of seeing things relatively flat. And we're still seeing things relatively flat as the market has been going. Not seeing a lot of movement here in terms of momentum. If we take a look at the next one, which is the NASDAQ, again, very flat. And I guess, we're kind of in that wait and see mode. Now, we were in that wait and see mode a couple of weeks ago ahead of the Fed meeting. And we're now in the wait and see mode ahead of the government shutdown. Not that it's necessarily moving the market, but it is kind of causing traders, I think, a little bit to pause here at the moment, just to kind of see what's going to happen. Now, the other thing that we can do is we can come back and we can say, all right, let's take a look at a single contract. Let's take a look at /VX. This is VIX futures. Now, I know we normally talk about the VIX as an index, but we're going to talk about the VIX futures, and this is a tradable instrument. So we can look at the VIX futures here, and we can say, look, VIX has been running a little bit higher here. We're seeing a little bit of an increase and some increase in momentum. Trend strength is picking up a little bit, but not terribly so. So we're just not seeing a lot of increase in volatility, at least coming from the VIX futures. Now, what's really interesting is this relationship between VIX futures, for instance, which is a tradable instrument, and the VIX index, which is not a tradable instrument, because the VIX index is going to move on its own based on the option volatility of the S&P 500. The VIX futures /VX are going to move on their own based on the supply and demand for VIX futures. But that's going to be tied to what's going on with the VIX. It's like the difference between an instrument that tracks a basket of stocks, for instance, that instrument that tracks the basket of stocks is a tradable instrument, is going to move with its own forces, as are the basket of stocks. So same kind of relationship here. They're going to trade with their own forces. So just kind of keep that in mind here. But VIX not really picking up this morning. I'm not seeing a big increase. I know a number of you are taking a look and have been watching the metals future. So let's pop into one of these. /, let's take a look at /GC, since that was asked, was Carl asked that question. So /GC, which is gold futures. And we've traded this particular contract as well as the smaller contract before. So one of the things that we're seeing, again, the two indicators they have on this particular chart, ADX, the kind of trend strength gauge. Anytime the ADX is above 25, that's a strong trend, either to the upside or to the downside. Doesn't matter. This is direction agnostic, the ADX is. So when we see this trend moving and it's up near that extreme, that ADX is an indication that this is a very strong trend. We also see the RSI, that relative strength index. By the way, Wells Wilder, the technical analyst, the phenomenal kind of godfather, if you will, of modern technical analysis to a certain extent, at least some of the mathematically derived technical analysis. Wells Wilder created both of these. And matter of fact, the ADX is a part of some of the calculations for things like parabolic SAR, parabolic stop and reverse, ATR, and others. But you can see what the RSI is doing. It's up in that upper range. So we're seeing this as kind of an extreme trend. Now, what we're seeing here on the right-hand side, though, is a doji cross. So gold future is giving us this doji cross at the moment. So what I want to do is I want to pop back over here really quick to our futures movers grid. And let's take a look at /MGC, the micro contract here. Seeing the same kind of thing, right? CCI is another measure of trend strength. MACD is another measure of momentum. But notice what's happening here with the micro futures contract, the gold futures contract here this morning as we zoom in. Here's that doji cross. So overall, there's a top and a bottom, a high and a low that this has already kind of expanded that range to. Here's that high right here, and here's that low that it's created. Well, okay, within that range, what could we be looking at? We're starting to see some definite move to the upside with some strong momentum, although it's throwing us a little bit of a doji cross of its own right here in the shorter term time frame. So trader, we could have created a trade looking at that bull flag bounce or looking at this breakout in this particular case and looking for that upward movement towards that target. Same kind of thing. Okay. I don't know that I did creating your own index, but that's an interesting topic. So Yuri, yeah, do me a favor. By the way, you can follow me, you can follow Mike Fairborn, and follow all the other coaches on X. Hit me up on X at Ben Watson CS and remind me of that. You can follow Mike Fairborn at Mike Fairborn CS, and we'll talk through that idea. That's maybe an idea for another webcast. That might have also been Connie Hill when she filled in for me on that trading index options webcast. So you can see that gold is continuing to move higher. While we're right here, let's take a look at a couple of others. /SI. This is silver. Silver kind of doing the same thing. Silver starting to make that move to the upside after a little bit of a bull flag type of pullback. It's not bounced yet on the longer term chart, but it certainly seems to be starting to do that here on the short term basis. Let's take a look at energy futures /CL, which is crude oil. And crude kind of coming back down into this range. We've been talking about this before. Crude kind of finding a little bit of a consolidation range here between 62.70 and 62.30. A lot of things going on in terms of supply coming into the market. /HO, which is heating oil. Because we're getting into winter time and we're getting into demand season for things like airlines. And so we're starting to see this upward channel building in heating oil. Let's take a look really quickly while we've got a couple of minutes left. /BTC, which is the Bitcoin futures contract. And it's kind of doing what Ethereum was doing, kind of making this consolidation and starting to break back to the upside. A little bit less of a symmetrical triangle and a little bit more of a sideways consolidation here. /ETH, which is the large Ethereum contract. You can see what we were looking at with that symmetrical triangle. And a couple of others here. /10Y. I wanted to look at this one here really quickly. /10Y. This is the interest rate futures contract on the 10-year interest rate. And it is continuing to fall just a little bit after coming up to a resistance level in the last little bit. So, I'll tell you what, this is kind of an interesting perspective. We've got some interesting things going on. I know I say that a lot. It is interesting. Maybe not to you. You might not think it is interesting, but I certainly do. How these markets move in relationship to one another. /6Y. /6J is the yen futures contract, which I happen to notice this morning was starting to break out while we were talking about things, starting to see a little bit of a bull flag breakout. And in the longer term perspective, that may be a bit of a reversal again off of that support level there, and maybe a little bit of this symmetrical triangle action that's going on, or ascending triangle action that's going on. We're moving towards that, but some pretty strong momentum to the upside in this particular case. So that's kind of casting our eyes around the market really quick. If you want to learn a little bit more about this, come back over here to the Trader Talks webcast page, and you can search for any of those topics. You can search for the playlists, but this is a great learning environment, a great resource for you, as is our Schwab.com /coaching page, One place you can go to learn a little bit more about trading futures is right here to on-demand webcasts, and pop into things like active trading and trading futures here in swing trading, for instance, in some of these webcasts, as well as our live webcasts. So great stuff, guys. Thanks for bearing with me as we ran into some of those challenges this morning. My thanks to Michael Fairborn for helping out today as well. And I hope that this was beneficial. My thanks to our production staff and our great review team, Nikki and Mindy. We'll see you guys again next Tuesday for more trading futures. Take care, everybody. Bye-bye.